Something happened today that shook the financial world, and if you blinked, you might have missed it. President Trump just announced his choice for the next Federal Reserve chair, and markets reacted in ways that are both shocking and telling. The dollar spiked, then tumbled. Gold and silver swung violently. Traders and analysts were left scrambling. If you're watching this, pay attention. In this video, we'll break down the events, the reactions, and what it means for your savings and investments. But first, like this video and subscribe to Macro Rewind so you don't miss updates that can change your financial outlook. Turn on notifications to stay ahead. The Federal Reserve quietly shapes the economy through interest rates, lending policies, and monetary tools. The appointment of a new Fed chair signals the direction of policy for years ahead, and this directly impacts the dollar. Inflation, interest rates, and metals like gold and silver. When the news broke, the dollar index jumped nearly a full percent within minutes. Gold dropped sharply. Silver followed. Investors are reacting to potential changes in monetary policy, trying to position themselves for what's next. To understand this, look at past Fed appointments. Traders consider not just political affiliation, but philosophy on interest rates, inflation, and liquidity. Will rates rise aggressively? Will the Fed stimulate the economy? These questions drive trillions of dollars in assets, from bonds to gold to stocks. Gold and silver reacted sharply because they are inversely related to the dollar. When the dollar strengthens, metals often drop. But metals also hedge against inflation and uncertainty. So today's moves reflect short-term reactions and long-term positioning. These swings are signals, not random noise. They reveal where smart money is moving and how the economic structure may shift over the next 12 to 36 months. Short-term drops in gold often mean traders are adjusting to interest rate expectations. Long-term investors may see opportunities. The U.S. economy is resilient, but inflation is elevated. Consumer spending is strong. Corporate earnings are mixed. The Fed faces a tightrope. Raise rates too fast, and growth slows. Move too slowly, and inflation persists. Today's announcement shifts expectations across the markets. Investors at home should not panic, but pay attention. Macro Rewind emphasizes the psychological side of markets. Emotional reactions like selling in fear or buying in greed often create missed opportunities. Analyze underlying drivers instead. The new Fed chair impacts global capital flows. Tighter U.S. policy can strengthen the dollar and pressure metals. Looser policy can support gold, silver, and foreign assets. Today's market moves reflect these dynamics in real time. Volatility is natural after a Fed appointment. Short-term swings help the market reprice expectations. Macro Rewind viewers know that volatility is a messenger. It signals risk and opportunity. Understanding this is more valuable than predicting exact prices. Watch these indicators closely. Interest rate projections, the dollar index, gold and silver movements. In equity sectors sensitive to rates like banks, tech, and high-debt companies. These show where the market is shifting. Retail investors often panic during Fed announcements. Headlines scream dollar crashes or gold plummets. Institutions reposition strategically during these swings. Macro Rewind helps you stay calm, analyze the signals, and make informed decisions. Today's Fed chair announcement is more than news. It's a market event that reveals expectations, risk, and future trajectories for the dollar and precious metals. Initial reactions are dramatic but informative. Watch, analyze, and understand. Don't react emotionally. If this video helped you understand today's market chaos, hit like, comment below, and share it with friends who need to see this. Macro Rewind will continue to break down market events clearly so you stay ahead. Stay informed, stay prepared, and remember, volatility is the language of markets, and understanding it gives you an edge.